Hey traders, have you heard of the latest? Trump is back in office and a potential ceasefire is happening on Sunday. So what does it mean? A big move is coming. Well, the market is gearing up for the big move. Traders are gearing up for the big move. Today, I'm going to break it down into technical and fundamental, what it means for gold and the dollar, and how it's going to significantly impact on the gold and dollar. Is gold price going to drop? Or is it going to stay afloat because of uncertainty? Well, we have to look at the trends and the price level as well as the opportunity it gives for gold. First off, we look at the fundamental issues, right? Trump is taking over to the office, right? There will be some changes to the fiscal policy because historically his leading administrations has led to stimulus and economic growth, and that means a strengthening in dollar. So the dollar strengthening might mean that it will push downward pressure on gold. So the exchange of dollar and gold will bring, the gold price down when the dollar is up. Next, we look at the ceasefire deal. Now, the ceasefire deal, when it's taking off the effect on Sunday, and if it holds, it means that there may be significant reduction of tension in the Middle East. And typically, such reduction of tension, and when it subsides, it means that there may be a decline for a demand in the safe haven gold, right? So gold prices may drop, and we are looking into, probably selling gold. However, this is not a sufficient evidence for us to just sell gold fundamentally, because here's the catch. Now, ceasefire may fail or may be shaky, and if that happens, investor might just go back and to gold and anytime to buy gold again and keep the gold prices supported and afloat. So with all this mixed signal, a strong dollar may weigh down on gold, and renewed uncertainty may keep gold price afloat. So what do we do now? We put in our technical analysis where it's crucial at this point, and it just gives us where we want to look at the price of resistance and support levels to know where is the price point, and we identify actionable levels.
Right, gold has been an exciting market to watch this year, starting with a steady uptrend since 19 December. That's about a month ago. And recently it has reached a key weekly supply zone at 2726 area, following by a slight dip last Friday. It pulled back to 2700 area, forming a inside day candle which signals market indecision. So two things. One is that gold might be pausing before making its next move higher, or it could be setting up for a reversal back down to test lower levels, right? So in this analysis, we'll break down the daily, weekly, H1 chart to uncover what price action is telling us. We identify key levels to watch and map out the potential zones for the coming week, right? Let's dive into the chart and start with the bigger picture on the weekly time frame. Right, on the weekly chart, gold is currently in a ranging market, consolidating within this range. We can see that it's been hovering around the range here, and the high is at 2726 supply zone, and this range has been intact for several weeks. So it's particularly interesting because now at 2726, this is the level we want to watch whether it will act as a strong resistance. Because if the weekly candle for the coming week, if we see a weekly close above this level, it will indicate a breakout from this zone and open the door for gold to target higher levels such as 2750 or 2790, or even want to see if resistance hold, then gold might retrace back to the lower boundary of the range, right? So we want to watch the levels. And moving on to the daily chart, is even more interesting because gold has been in a clear uptrend since 19th of December, and that has been the past 1 month, producing higher highs and higher lows. The sustained bullish movement pushed prices all the way into the weekly supply zone at 2726. So It's important to note that the price has reacted to this supply zone. I mean, on Thursday, and then it took a small dip on Friday. Okay, so if gold starts to pull back, the first area of interest would be 50% FIB levels, right? And next 61.8% FIB level, right? That said, gold making a Friday inside day candle signals indecision in the market, and this makes market Monday's opening crucial, right? If gold breaks above Thursday high of 2726, right? A break, we could see the uptrend resume with price targeting 2750 or higher, right? Conversely, a break below Friday's low at 2700 could signal the start of a deeper retracement to the 50% FIB level or 61.8% FIB level. So now let's zoom into the H1 chart for a closer look at the immediate price action. At this time frame, gold has recently completed two waves down from its recent high at 2726, forming a short-term bearish structure with lower highs and lower lows. So we want to watch 2688, and if there's a break below, we want to confirm a shift in sentiments, and which could lead to deeper retracement below 2650 or even lower. Right, so on the other hand, if gold holds above 2700 and manage to reclaim 2726, it will invalidate this short-term bearish structure and signal continuation of the bullish trend. Then we want to be looking to buy to push price higher to 2750, right? Which is the next logical resistance level on the chart. Okay, to wrap this up, now gold is at the critical juncture because it sits at this top of the weekly, 2726, and it's still range bound, but daily and H1 chart indicates that a breakout or breakdown could be imminent. Right, so the key levels to watch: bullish buy, gold's break above 2726 would want to confirm a continuation with the uptrend with potential targets of 2750 or higher. Bearish sell, if gold fails to hold 2688, we could see deeper retracement towards 2650 or the 50% FIB level or 61.8%. Right, if it's still range bound between 2700 and 2726, then we would see more consolidation before the next major move. As always, wait for clear confirmation before your decision to trade and manage your risk accordingly. So do let me know in the comments to see where you think gold is headed next.
Thanks for watching. If you like this video, do follow me for more market updates.